Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about International Business Machines CORP quarterly report. International Business Machines, IBM, provides a wide range of integrated solutions and services across various segments. These include software, hybrid cloud and AI platforms for digital transformation consulting, skills integration for strategy, experience, technology, and operations infrastructure, on-premises and cloud-based server and storage solutions, as well as lifecycle services for hybrid cloud infrastructure deployment financing. Client and commercial financing for hardware, software, and services. IBM also has strategic partnerships with various companies, including hyperscalers e.g. Amazon Web Services, service providers, system integrators, software and hardware vendors, e.g. Adobe, Microsoft, Oracle, Salesforce, Samsung Electronics, SAP. The recent surge in International Business Machines Corporation, IBM, stock price can be attributed to a steady increase over the past year. With a 23.69% rise in the last year and a 30% year-to-date growth, IBM's stock has shown resilience. The latest closing stock price of $285 indicates a stable market performance, with a 52-week high of $301.04 and a low of $203.51. This consistent growth suggests that investors' confidence in the company remains strong, contributing to the increase in its stock price. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, hybrid cloud services have contributed significantly, with a 13.9% increase in revenue. Automation has also been a major driver, with an 18.1% growth rate. Additionally, investments in product innovation and strategic acquisitions such as HashiCorp have positively impacted revenue. On the decline side, transaction processing has seen no growth, while prior year pension settlement charges have had a negative impact on revenue. China's decreased revenue of 20.1%, adjusted for currency, also contributed to the decline. Other factors that may influence revenue include economic conditions, industry consolidation, and capital allocation priorities. Overall, a company's ability to adapt to changing market conditions and invest in innovative technologies can drive growth, while external factors such as economic downturns and industry shifts can lead to declines in revenue. Net income and profit margins experience significant shifts. The company's net income has undergone substantial changes, with notable increases of $3,109 million in the 9-month period and $4,993 million year-to-date in 2025. This growth is reflected in a significant improvement in net income margins, rising from -2.2% to 10.7%. Conversely, gross profit margins have decreased slightly from 55.3% to 57.6%. The increase in net income and improved profit margins can be attributed to several factors. Retirement-related benefit plans have positively contributed to other comprehensive income, while derivatives not designated as hedging instruments have added to net income. Additionally, foreign exchange contracts have had a positive impact on net income. Performance improvements within the company's operations have also played a role in this growth. Overall, these changes indicate a significant shift towards increased profitability for the company, driven by various factors that have positively influenced its financial performance. The company is indeed generating positive operating cash flow, as evident from multiple pages of financial data. The operating cash flow is reported to be positive for both years, with a significant amount of net cash generated from operating activities. Specifically, the company recorded $9.2 billion in net cash from operating activities for the 9 months ended September 30, 2025, and $8.248 million, excluding financing receivables, for the same period. This confirms that the company is generating sufficient cash flow to support its operations, indicating a healthy financial position. The company's debt level has seen a significant increase over the past year. The current debt stands at $146,312 million, representing a 7.1% rise from the previous year. Furthermore, total debt outstanding at September 30, 2025 was $64,150 million, up from the previous period. This increase in debt is also reflected in the company's interest expenses, which have risen by 13.1% to $1,457 million for the 9 months ended September 30, 2025. The cost of financing has also increased, with a rise of $14 million to $268 million. Overall, both the company's debt level and interest expenses have seen significant increases over the past year. Management is optimistic about the company's outlook, citing its hybrid cloud and AI strategy as a key driver of sustainable and profitable growth. The company will continue to invest in innovation through acquisitions and organic means, focusing on emerging technologies like quantum to accelerate innovation speed and impact. Key areas of focus include driving revenue growth and productivity improvements, maximizing returns from AI transformations, investing in hybrid cloud, automation, data sovereignty, and on-prem solutions, focusing on strategic investments to drive long-term growth overall. Management is committed to delivering consistent execution and long-term growth aligned with the company's financial model. The company has made several strategic moves through acquisitions and divestitures to shape its business landscape. Acquisitions have been a key part of the company's growth strategy, with notable purchases including StreamSets, WebMethods from Software AG, and HashiCorp. These acquisitions are expected to enhance the company's capabilities and offerings in various areas. On the other hand, the company has also divested certain assets to focus on core business operations. Specifically, it sold QRadar SaaS assets for $351 million and the Weather Company assets for $241 million. The company has a history of paying dividends and buying back shares. In 2025, it paid out $4,681 million in dividends, with quarterly payments totaling $1.6 billion. The company also bought back shares worth $851 million for tax withholdings and an additional $4 billion as part of its common stock repurchase program. That concludes the financial summary for International Business Machines (CORP). Feel free to comment below, and I will be happy to answer them when possible.